This is Eswar Menon of Harper Capital Management with a brief commentary on our outlook and an update on the financial markets on Tuesday, April 12th, 2022. Developed equity markets on average are down about 6 to 10% on a year-to-date basis. Emerging markets have a wider dispersion, with China down about 14%, India flat, and the commodity-rich markets in Latin America and Middle East having strong positive returns for the year. Equity markets have been driven this year by the crisis in Ukraine, inflationary expectations, and the increase in bond yields. Inflation numbers, the consumer price index in the U.S. reported today was at a high over a couple of decades, a high of 8.5% on a year-over-year basis. The core inflation was 6.5% change on a one-year basis, but the month-on-month change actually came in lower than expected. We do think that inflationary pressures are more likely to be transitory, and then the expectations itself remain somewhat anchored in the long term, and we do expect that inflation abates as we head into 2023. Bond yields have risen quite a bit, with the 10-year U.S. Treasury yield at touching a high of 2.83% today. And every part of the bond curve, starting with the 2-year, has risen substantially over the last 1 year. At a couple of times this year, we have even seen a mild inversion in the 2-year, 10-year part of the curve. The 5-year forward inflation expectation still remains well anchored in our view, albeit slightly higher than maybe a year ago, and that is at a level of 2.4%. These are long-term inflation expectations. The major geopolitical issue for this year has been the war in Ukraine, the Russian invasion of Ukraine. We tend to think this was a major mistake by President Putin of Russia. There's been devastation in Ukraine, and we think the long-term implications for Russia in terms of its economic development potential is negative. There are going to be a lot of implications for the security in Europe, for security in Indo-Pacific, and relationship among the major geopolitical powers in the world. We'll address these issues in a quarterly newsletter. Commodity prices have risen, partly because of what's happening in Ukraine, and also with inflation expectations globally. Energy prices are much higher. Gold prices have risen, and other base commodity metal prices like copper have also risen this year. As we look forward in terms of important issues for this year, and as we go into 2023, how things unfold in Ukraine, whether the war continues or whether it comes to an end in the near term, would affect what happens in the markets. COVID in China, we've had many mini lockdowns and now maybe some major lockdowns like in Shanghai. The economic implications of that in China and the rest of the world would be an important factor. U.S. inflation, U.S. interest rates, and earnings for the rest of the year. In fact, the first quarter earnings season is just starting. We do expect earnings to be fairly robust, but we also think that as we go through the rest of the year, that consumer spending probably slows down and company earnings reports look weaker than they have for the last 12 months. In terms of our portfolio, our long-only strategies have all outperformed on a year-to-date basis. We'll provide more color in our quarterly newsletter. Our approach to investing stays the same. We take a very long-term generational approach. We have low turnover portfolios, and we believe that protection of capital is the best way to compound returns. Investors, for more information, can call or email us. Thank you.